Hi everybody, welcome to the Tradies Accountant and MO webinar on stock management. We had a start time at 3 o'clock today, but I might just give it another 30 seconds or so just for everybody to jump on board. I can see a few people have already jumped on board so far. On the bottom of the panel, if you just raise your hand, it will just let me know you can hear me and everything's okay. Yep, I can see some hands going up. That's awesome. Yeah, if everybody just raises their hand just to let me know that you can hear me. The computer's working. All right, awesome. Well, basically the webinar start time was 3 o'clock. So I think what we're going to do is just get started with the webinar, and then anybody that jumps on will be able to catch up. Just to let everybody know, the webinar today is not going to go for too long. You're probably looking at about 25 to 30 minutes. And we're basically just going to go through and cover everything that's involved with managing the stock. In particular, if you're a builder, it's probably going to be WIP. And if you're an electrician, plumber, or other trade industry, it's probably going to be inventory. All right, without any further talk, I can get onto the webinar. So yeah, welcome everybody. So today it's Tradies Accountant and Modus Operandi, and we're going to be talking predominantly about stock management. So there's myself, I'm the CEO of Tradies Accountant, or the partner at Tradies Accountant, and we have Tiffany on the line as well. Maybe Tiffany, you can do an introduction.
Hello everyone, nice to see you. Sorry you can't also see me, but there's a picture of me for you to remember while we're running through stock management today.
Yeah, fantastic. Thank you, Tiffany. Okay, so we'll just do a very brief introduction to the companies. So my company's Tradies Accountant. We offer accounting and financial advice to people involved in the trade industry. So we do builders, plumbers, electricians, any of those contractors, and we only do the trade industry, which is probably what separates us from other accounting firms. We offer a range of services based from accounting, bookkeeping, through to a bit of business advisory. So how to improve your profitability, how to improve your cash flow, and how to improve your margins. So that's basically what Tradies Accountant offers. Let's click over, and I'll throw over to you, Tiffany, so you can explain what Modus Operandi does.
Thanks, Bryn. MO, we are all things systems. So what makes us unique is that we have a lot of business and industry experience, and like Bryn, we focus in the trades and construction based industries. And so we have a really niche skill set around understanding how your business operates to then be able to match your software or your job management system to suit your specific software requirements or your specific business requirements. So you can see there we do optimization. If you're using a package like Simpro, we'll go through, do a bit of a health check and understand how you operate to then tell you how you should be using it, ongoing maintenance, and then obviously we can help you with any implementation and ongoing training.
Thank you, Tiffany. That was fantastic. Now, just to put a bit of context around the webinar today, Tiffany and I ran a webinar towards the end of last year, and that was based, what was that webinar based again, Tiffany?
Costings, job management, yeah, job costings. And we had a real buzz around stock, didn't we?
Yeah. We did a poll on that, and we found out that I think it was only about 10% of the people on the webinar were actually measuring their stock on hand or WIP. So when we asked what would be the best webinar to run for the next one, a lot of people said how to measure the inventory and how to measure the WIP. So we thought it'd be a good idea today just to run on a high overview level of how to get that done, how to get it done efficiently and effectively. So that's the reason we're doing today's webinar. And here are some of the clients that we work with at Tradies Accountant, and also some of the ones that Modus Operandi work with. So you can see down here, we work with single contractors up to kind of national builders, and pretty similar with the Modus Operandi client list as well. So I think both our companies deal with clients all around Australia. That'd be correct, Tiffany?
Yeah, we actually have a lot in New Zealand and some in the US and UK as well.
Yeah, awesome. That's exciting. All right, well, let's get kind of straight into it. What are the main areas we're going to cover in today's webinar? And that is, what is stock management? What are the risks and mishaps of not managing stock? What are some of the advantages of managing stock? What reports can you do around the stock? And also probably a big one is how to implement it. I know it's great to sit on a webinar like this and listen to us talk, but really that implementation part at the bottom there is probably one of the most important things. If you can leave the webinar today with a little bit of a plan on how to implement some of these things, and you're really going to get some value out of the webinar today. Okay, what is stock management? I'll throw to Tiffany on this one and she can explain.
So most of you should know this, but stock management is the process of ordering, storing, tracking, and obviously controlling your inventory. With a bit of luck, if you've selected a decent job management system that is designed to manage your specific workflow, then this would be managed within your job management software. It is very hard to do any sort of stock management outside of a job management or an accounting management software. So think about that when you're going into selection, if you are a company that doesn't yet have any sort of job management system in place.
And Tiffany, I know it's a hard question, but just what are some of the main job management softwares you work with day in, day out, and what kind of industries do they suit?
Yeah, good question. So they go right from the lower levels for a small residential player of something like ServiceMate. Ones in the middle are your Tradify, your Tradify, your Fergus, your Aeroflows, and then they go up to your Simpros, and then construction goes up to your Nexvias, your Builder Trends, and your Build Exacts as some examples. Now, not all of them manage inventory all that effectively, so you've got to really think about that. Simpro, I know a few of you on here are on Simpro and Nexvia. Simpro particularly does a really good job at managing it. And it's designed, which I'll tell you shortly about, it's designed to do it for you if you just let it flow through the process, which I know I'm making it sound easier than it is. I promise I'll give you some tips.
Awesome. All right, excellent. Let's get on to the next. So risks and mishaps of not managing stock. Maybe Tiffany, again, you can talk about some of these aspects.
Yeah, sure. So look, a lot of people say to me, well, why do I have to manage stock? What's the point? And a couple of reasons are inaccurate stock levels, right? So we've got no visibility as to what we've got. Inflated gross margins. So this gets really underestimated. You're looking at the margins on a job and you're like, hey, happy days, we've hit 50%, 60%, 80% GP. But the reality is that you actually aren't that high because you've got hundreds of dollars worth of stock that you haven't accounted for, right? And so people miss that. And that's a really big mishap because it's completely underestimating what you're actually earning. And then a high stock value left unused. People don't necessarily think about this all that often. And it is slightly different for builders and high-level project clients because they tend to order things as they need it. But if you're a service-based business, stock values start to add up. And as an accountant, Bryn, I'm sure you've seen some pretty decent stock values sitting in the accounting package. And if you've got that sitting in your yard and it's unused, eventually it's going to be no good. So managing stock allows us to really flow through that, keep that value as low as we possibly can. And I'll take you through some advantages, obviously, in a second.
Yeah, and I just thought some other ones there as well. If you have to conform on a QBCC license and you don't have inventory on your balance sheet, then it will look like your assets are actually lower than what they are. So, we get a lot of clients that might be getting audited by QBCC and they think they don't meet the assets, but really they've got a lot of inventory or work in progress on their books. So that's a big one as well. It's just not having that value on your balance sheet where it should be. And another thing is on an accounting level, it will look like, a lot of the time it'll look like you make a big loss in one month and then a big profit in the other month because there's no smoothing of your profit and loss. Because obviously sometimes if you're working on a commercial project, you might buy all your materials in one month, but then you might invoice for those in the next month. So there's no matching of the income and purchases. So I think measuring the inventory smooths that profit and loss out. So they're definitely two elements that we notice on an accounting perspective as well.
And even if you go to sell your business, right?
Yeah.
100%. If you don't have an inventory level, then you're minimizing the value of your business.
Yeah. And also another one I was just thinking off the back of that is if you're not measuring it and you've got staff that might be actually, taking some of these products home, you kind of don't know what you're leaking out of that inventory side. And I mean, that can happen a lot, especially if you've got 10 guys running 10 vans. If you're not measuring per van, then, stock can go missing and you don't know how much is really going missing.
Yeah, it's a good point. I have on the advantages in the next couple of slides that employee accountability is a big one, but it's also a major risk, right? How much
Yeah,
are they potentially pocketing? So obviously you want people that you can trust, and with a bit of luck, they're coming to you first, but it's a reality, right? They're holding
yeah.
a lot of dollar value.
Oh, and like when you're small with 2 or 3 electricians or 2 or 3 plumbers or whatever the case may be, it's easy to kind of stay on top of it. But when you get to the level and you've got 10 of them, if you're not measuring it, it's going to become a lot harder, you know.
Yeah.
All right, so this is the one you're talking about, Tiffany. What's some of the advantages of measuring your stock then? I know we discussed a few briefly, but let's get into a bit more of it.
Yeah, so accurate stock levels is obviously a big one. You know, the ability for your team to just be able to pick up a software system, pull up a storage device, and see what quantity of what item we have at all times. The ability to quickly restock. This is one that that is really underutilized. It's the ability to basically see immediately what we should have in stock, and then click a button and say, well, hey, we're not quite at those levels, so can you please raise me a purchase order for all of those items? Where I find that working really well, Bryn, particularly, is when we're restocking vans. So if I've got, 5-10 cars on the road, and I say, right, I want every car to have, whatever it might be, 10 90-degree bends or, 10 PowerPoints, then it really gives me the ability to say, hey, every week, technicians come in, we'll restock your cars to your maximum stock levels, and I'm just pulling it out of my warehouse, not even having to raise a PO.
And is that straight from the system, Tiffany? Like, is that like a SimPro kind of will tell you when the minimum's at, and then it will automatically tell you so you can raise the purchase order? Is that how that works?
Yeah. SimPro actually does a really nice job of that.
And what
Yeah,
about
it
the
comes
other
up with quick alert.
What about like your supply or your service mate? Do they do the same
No,
thing? No.
unfortunately not. They're really limited in terms of inventory. In fact, most of them don't have any sort of inventory tracking.
Yeah.
And that's why it comes down to making sure you're picking the right job management software, right? If
Yeah,
you've
Yep.
got to think about what you are as a business, not just today, but in the next 5 years, and really pick something to suit that so that the system grows with you.
Yeah, that makes
So
sense. Definitely.
yeah. We've spoken about the next two, accurate job costs and accurate reporting. So these, hopefully make sense. If I'm not allocating my stocked items against the job, then I've used something and the job hasn't accounted for that in terms of cost. So obviously I've got higher inflated margins on that. And it's also hard for me to see what the profitability of a certain division is within my business, right? So like if I'm looking at my service division and it looks like I'm making a, 60% GP, that's probably pretty inaccurate.
Yeah. And that GP would bounce around a lot, wouldn't it? Like 1 month you'd be making 60%, then the next month you're on 20. And then you'd be probably thinking to yourself as a business owner, well, that's strange because the last 2 months have been very similar. Why has my GP jumped around so much?
In your accounting package, you'd see that. You wouldn't see that so much in your job management software. And the reason for that is because when you raise POs for stock, it'll be put against a default account rather than the actual revenue category of, say, service. But if you are raising a purchase order, for example, against a job, and you go, oh, I'm just going to stock up, right? I'm just, I only need 1 PowerPoint, but I'm going to order 20 while I'm here. And now 20 of those PowerPoints are sitting on that job. You're like, whoa, we've made a pretty decent loss on this. Well, of course, you didn't install 20, right? 19 are still sitting in the car.
Yeah.
So yeah, that's a pretty big one. Ability to minimize the cost of holding stock. So we spoke about this, and there's some pretty big shortfalls to that. Some insightful reporting. Not many people, I would say, use this very often, but I love some of these reports. For me to be able to pull up and see how often am I selling a certain item and how many have I sold in a certain period of time. Particularly if you're doing residential work, it gives you some insight as to, well, what should we offer the market? Should we do, a flat rate price on whatever it might be, tap installations or PowerPoint installations? And that quantity of items sold also can help you negotiate with your suppliers, right? Please your accountant and bring your costs down.
Yeah, 100%. And is that something where you'll run that and you can run it on like a kind of a per van or an overview of the whole company on what the number one selling items are and then what their GP is, like the highest GP products? So how do they look, those reporting?
Yeah, so there's some standard ones that are, everything you need to know in a basic report around how many of, for example, these 2025 WE standard double PowerPoints, how many have we sold? And I'm looking at that over a certain period, and I can see the average price that I've sold them for, and therefore what I've made from them. And then you can build some custom reports if you really wanted to go a little bit deeper.
Yeah. Oh, that's fantastic.
Yeah.
And then employee accountability. I know we were talking about that already, but if you're measuring per van, it makes it a little bit harder. If something like a Simpro can actually tell you exactly what the stock is per van, makes it a lot harder for things to go missing, and also that the employees, I guess, are charging for everything that's in the van.
Yeah, exactly. And this is one of the things that I talk about pretty heavily when we get to implementation, but it's employee accountability, not just from the perspective of making sure that what you've bought stays your property, but also making sure that what they've used goes onto the job, right? So yeah, it's a big advantage. It gives you extra visibility, not only from a stock perspective, but from an employee perspective as well.
100%. So there's some really good advantages to being able to, measure or being able to manage your stock more effectively. And I know we're touching base on these reports. So maybe Tiffany, you can go into more detail about these type of reports you can run in regards to the inventory or stock.
Yeah, we just we had a comment in the chat as well, Bryn, that I was just going to bring up. Aging of electronics is affected too. Totally, right? So particularly, this is so prevalent in security from an electronics perspective, or even AV. I see it a lot in where, last year's products age, right? We can't use them. So the less you're counting them, the less visibility you have over them, then all of a sudden they become redundant and you're having to write them off. So stock is important, really, really important for that.
Yeah, definitely, 100%.
Sorry, I digressed. Stock reports.
No, totally fine. Anyone also, we've got the Q&A down the bottom. If anyone wants to ask questions, just ask them as we're going, and then Tiffany and myself will endeavour to answer them as well. So we want to make it as interactive as possible. So if anyone does have any questions, just put them up on the Q&A.
Cool. So we'll go back one.
Yeah,
stock
sorry.
reports.
Yeah, sorry.
So we talked about some of these reports in our last webinar. I don't know how many double attendees we have, but you want to talk to your job whip report, Bryn? I know that's one of your favorites.
Yeah. I mean, this one particularly for builders, we get lots of people caught up on how to run WIP reports. So, if you're using a software like a Builder Trend or a NextVR or a Constructor or whatever kind of software you're using, they can generally run the work in progress reports for you. And so what generally happens is at times at the start of a job, if you're a builder, you get a lot of invoice in advance. And then as the job gets towards the last end of the job, it generally becomes work in progress. And what that means is it's kind of like I spoke about at the start, it's matching the invoice to the expenses. So sometimes if you're a builder, you might, go ahead and spend a lot of money on expenses that are on the next progress claim. And that's actually an asset to your business because you haven't invoiced that yet. So that work in progress is definitely something as a builder you should be measuring. Now, if you don't have those types of packages like a Builder Trend or a NextVR, then you can even put this together. I've got clients that we put together a spreadsheet for them, and they're able to kind of have their contract value plus their expected profit plus what's been invoiced to date and what's expensed to date. And it can become extremely important, especially if you've got 2 or 3 builds on the go at the moment. Then you really want to measure that because some of it could be an asset to you. And at the moment, we're getting a lot of activity with QBCC, and a lot of people are really worried that they're not meeting the QBCC minimum financial requirements. And those assets, that WIP is an asset, so it can help the builder get across the line in that. But also it helps them to understand their cash flow on the job as well, because as you know, a build is a pretty big job. Like it could be 300,000 or it could be $1 million. So there's a lot of cash flow constraints on a build, and to understand where you're at in that build and where you're going to get the money is extremely important. So, I mean, I've done this with a fair few clients, and I've kind of had a lot better understanding of the finances through the build. I know work in progress, it's similar to inventory, but it's probably a little bit more complex to measure. So I won't go into the spreadsheets and everything like that now, but if anyone in the webinar does have issues with that, let us know, and we can have a look at it on an individual basis.
Yeah, perfect. And even from a smaller perspective, from a trades perspective, a WIP report can be slightly lesser scale, I suppose, than your large construction companies. So instead of having the issue where you're buying things in one month and selling them in the other, and therefore you're moving things around between your balance sheet and your P&L, a WIP report can also just run a WIP report can really just serve a really nice purpose of, hey, how much money should I have invoiced? Right? Like, so
Yeah.
I can pull up my WIP report and go, right, we've got 25 jobs sitting in WIP, and we've spent $2,000 worth of labor costs and $3,000 worth of materials that were sitting in stock, So a WIP report is a really nice way to not only make sure that invoices are going out, but to also see what you've got coming up from a forecast perspective.
Yeah, in particular, commercial plumbers, I know, like commercial plumbers and commercial electricians, if they're doing project builders, sometimes they can have a fairly large WIP balance on there because they may have done the first stage, the roughing stage or something, and bought materials, but they haven't invoiced for that stage yet. So, sometimes that can actually, if they're doing, 15, 20 houses, 30 houses at a time, that can work out to a fair bit of WIP from our experience.
Yeah, absolutely. And you've got some of those other companies that work similar to potentially a builder, for example, security and AV, where they've got a big cost up front in terms of deposits that they're getting from the client, but also materials that they're buying. And WIP comes into handy then to be able to do your journals backwards and forwards.
Yeah, 100%, because like all that's going to go to inventory, and then when you invoice the job at the end of that next month or whenever, you can bring it across to cost of goods. So yeah, it's a good point.
Yeah. So profit and loss report, that everyone should be looking at that all the time. Stock allocated and stock unallocated, they're both really helpful reports. So stock allocated helps me see, right, over the course of, say, the last month period, how much stock have I actually allocated, and are we using what we've got? Stock unallocated tells me when we've actually said we were going to use particular products, say from a quote, but we haven't allocated anything yet. So have we not done the job? Have we not used the materials? Or have we simply forgotten to allocate the stock? So it's a bit of a stopgap, that one, to make sure that we're actually doing what we're meant to be doing to keep the system flowing.
And I guess on that profit and loss, if you're a plumber, or if you're a builder, or if you're a electrician or a security company, what you really want to, I guess, see on your profit and loss is the opening inventory value and a closing inventory value, and then potentially an open work in progress value and a closing work in progress value. So if you're running that profit and loss and you don't have those on your profit and loss, then you're probably going to encounter the challenges that we're talking about here, aren't you? If you're not seeing the figures and not understanding what they are, I mean, you may have the opening and closing value, but if they both say $5,000 and that probably just, the accountant's probably just guessed that it's $5,000, then
well, you don't guess, Bryn.
Yeah,
hard facts,
personally,
right?
I normally get the information, but I have seen a lot of clients that have come along and you look at the figures and you kind of think, I don't know if they've actually done a stock take to get that value, or if they've just kind of guessed that value. And I guess that's what we're talking about today, isn't it? Is that you're going to get a lot more value from being able to measure it properly than trying to just create something that really hasn't been measured.
Yeah, totally.
Before
we get onto that quickly, I was just going to mention, for those of you that are using SimPro, particularly SimPro, it does have some functionality called inventory tracking. And what that does is does the journals backwards and forwards between your balance sheet and your P&L, depending on when you're buying stock and then when you're actually allocating it to jobs. So it does all those journals automatically for you. So if you haven't set that up and you are really down to the T on your stock allocations and you're doing that well, then it's worth looking at that. Helps your accountant out for sure.
Yeah, 100%. So I guess the $1 million question now is, how do we implement this? Like, what's the best?
How do we implement? Now, look, I'm gonna disclose something first. I have done many of stock takes in my life. I've been in the trades and construction industry since I was about 9 years old. And so I have counted and counted and counted. So I'm not just telling you how to do this. I know it's hard. I get it, but I'm here to walk you through it. So the good news is whether you know it or not, you're actually doing it. You're just choosing not to keep it up to date, right? So this is the process. You raise a purchase order, which you have to do to send through to the supplier. That puts it into stock. When you use materials on a job, the cost is added to the job and the item is removed from your stock level, right? So the process is happening. It's designed to be really streamlined and flowing. So the $100 question or the $1 million question is, why is it so hard? And it's because we haven't already counted our stock, right?
So with counting the stock, wouldn't the system do it for you then, Tiffany? If you're raising it and then it's going to the job once you do the job, wouldn't the system already be working out your stock level? Why would you have to?
Absolutely, but not the first time.
Yeah. Okay.
What's my opening stock level, right?
Yep. And so once you got your opening stock level, in a perfect world, shouldn't that just flow through and then your closing stock level should be correct every time?
You bet.
Yeah. And what are the reasons why potentially it might not be correct?
So the predominant reason is that people forget or choose not to allocate stock to jobs.
Yeah.
And really, I mean, the flow-on effect, we just talked about all the disadvantages, right? Like we're now, margins are incorrect, the stock's still sitting in stock when it shouldn't be. So it actually creates more problems than it does not. So it's just that process of adding the stock.
Yeah. So is it generally a user error or is it generally a system error?
No, it's generally user.
User.
More often than not user. Yeah.
So we got a question from Joe, returns and warranty items as well.
Yeah, and the system's designed to handle this, right? So if, for example, you do return something, then you would get a credit note and you would credit that against the purchase order, which you have to do anyway from a financial perspective, and that actually credits those items back out.
Yeah.
From a returns perspective, from a warranty perspective, if the item is no good, then that's obviously something that you need to take up with your supplier. But if you've had to use two parts because one's failed from a warranty perspective, you still need to have both of those parts on the job. It's still a cost.
Yeah. Well, they're really good questions. Thank you for that, Joe. That probably everything seems simple until there are problems outside of the normal day-to-day operation. And
Totally.
it's really good you raise those because, when you look at this on a high level, things look really simple, but when you go to do it, it actually becomes more complex. I think Tiffany and I both know that pretty well. So how to implement? So these are some really good ones here on how to implement this stock take. Maybe Tiffany, you can really jump into it.
Yeah. So look, the reality is that there's hundreds of businesses, thousands of businesses that all have to do stock takes, right? So you're not the first and you won't be the last. And I know it's hard, but it's okay to say we're unavailable for the day. We've got to count stock, right? It is just something you've got to do. Get the whole team involved, organize a team barbecue, get your calculators out. If you have to do it on a Saturday morning, do it on a Saturday morning. Turn on your email auto replies, put a sign on your door, try to avoid distractions. And if you are an emergency business, then have someone available to answer calls. So that's a couple of really quick things about how you can arrange a stock take. Pick a date and stick to it. Because it's easy to put off.
And that would probably be towards the end of the month, yeah? Like you could, as part of your end of month process, you could, run a barbecue as a celebration. Potentially, I'm just throwing it out there as your end of month celebration, do your stock take, and then maybe potentially have a few drinks after that once you've got it all done,
And you certainly wouldn't have to do a stock take every month. You might be looking at doing a stock count every 6 months once you've done it the first time. But make it fun. And look, if there's a barbecue and a couple of drinks, you can invite me. I'll even help you count.
Nice, very nice. And what about for the vans, Tiffany? Like if you've got an electrician or plumber, if they've got like 10 vans or 15 vans, what's the best way to do that? Because I know that's a question I get asked from a lot of clients. It's
no different. It's absolutely no different. The complication is that the guys are on site more than the warehouse does. The warehouse doesn't move. So the hardest part is just getting the vans in one spot. And generally, depending on how many people you've got counting and entering into the system, I would normally do some sort of a rotating process where I've got, a couple of vans there at a time, probably not all 15.
Makes sense.
Yeah. Add your items into your job management system. Do it as you go or immediately the next day. So a lot of these systems have the ability to actually do barcode scanning, and as you're walking around the warehouse, you're scanning the barcode and counting and chucking in the quantity. So I highly recommend you doing it. So one thing that happens that I see a lot, Bryn, is that people with great intentions do their stock take, and then it sits on their desk, the piece of paper with all their stock items for a month, and then guess what? Their stock counts out.
Yeah.
Right.
Wow.
So this is probably one of the biggest ones, is that you have to do it, on the same day or immediately the next. You have to do it before people start using stock.
Yeah, of course. Yeah, otherwise it's just changing as you go, isn't it? And is there a training manual for all the staff? So is that like create the system and process? So basically, I guess, if you're a business owner, delegation is crucial, isn't it? So once you've got that manual, you can just give it to the technicians. They can go and count the stock in each van, and then you come back and get those figures, put it into your system, and then happy days.
Yeah, and it's also a manual from the perspective of what do you need to do once it's counted, right? So if you haven't been managing stock yet, then your technicians may not know how to allocate stock. So they have to know how to do that immediately as their stock is counted. So prepare the manual so that they know how to allocate stock. You can now do screen recording on your mobile device really easily. So just record how they do it, send it around, make sure they understand so that you don't have any mishaps, because the minute that stock's not getting allocated, then everything's out of whack. So the process has to be smooth sailing.
Yeah, 100%. So these are some really good tips for that implementation process, aren't they? These are some really good things to just kind of get out there, put the date in your calendar, make sure you have some manuals and stuff around it. Obviously, holding accountability around that stock take. So once you put it in the calendar, you've just got to make sure you do it. I guess that's at the end of the day, that's what I'm hearing from this. It's really crucial to do it. So you've just got to schedule it out like you schedule out everything else in your business.
Yeah. And even, that last point as well can also refer to, have whoever it is sits in the office potentially just checking and making sure that stock is being allocated. So as you would have done when you first started using a software, making sure that they're clocking on and clocking off, making sure they're actually allocating stock. And if they're not, get on the phone, because people hear you after about 7 times of you repeating the same thing. So if you've only said it once, good news, you've only got 6 times to go.
Yeah, wow, 7 times, right? So does it go with kids as well? So if you tell kids,
no, it goes up exponentially depending on age.
Yeah, there you go. Look, I think we're coming to the conclusion of the webinar. I know it's very short and sweet, but basically, I think we're just trying to really reaffirm that you need to be measuring this stock, how important it is to do, and there are some quick, really valuable tips in there to what you can do after today's meeting. If you schedule that time out in your calendar and make that really important for the business, I think then you'll be able to ram home the advantages that Tiffany and I had just been discussing. So, at the end of the webinar, if anyone wants to check us out, go on the Tradies Accountant website, fill a form in, and somebody will contact you. Here are some of the things that we offer, which is, if you have a job management software like a NextVR, like a Builder Trend, we can help enter the bills, match the bills to purchase orders, all the accounting functions, timely reports, and then strategy meetings off the back of the reports. Obviously, Tiffany's the expert at how to get the information in, and what we can do from that is then be able to have a look at the information to make real decisions off the back end of the information. And maybe, Tiffany, you can just once again go over what you can offer on the back end of this.
Yeah, so particularly for stock, if you are counting it, we often have teams working overnight to get the stock built into the system. So we can help you enter the data after the fact. And then obviously we need to make sure your catalogs are all up to date before you start looking at your stock. So there is a couple of flow-on effects if you're using a job management software. So we can help you get your system up and ready to go. And also don't forget about all those manuals and workflows. If you need those done, then we're certainly here to help.
Oh, look, those manuals and workflows are an absolute savior. Like you know, having somebody come into your business and create all those lets you focus on what's important, which is generally making money. You know, if you're sitting there spending weeks on end trying to write system manuals, which if you're a business owner, most of us have probably done that previously, to be able to pay to get that done, and then just pretty much you just have to implement off the back of that. It makes it so much easier in my opinion. So really important service. Thank you everyone for joining us today. If anyone has any Q&As, Tiffany, I'm pretty sure you can probably stay on for a minute or two and we can answer.
Yeah, absolutely.
Feel free to just jump on and ask any questions that you have for us. As I said, we made this webinar very short for the point that we just wanted to emphasize the importance of measuring the stock, what some of the advantages are of doing it, and then giving you some real implementation tricks on how to implement it. But you know, if you are sitting there and you're thinking, oh, it's too challenging, or it sounded good but it's just too hard to do, then I'd highly advise you to drop Tiffany a line or drop myself a line, and then, you know, sit down and work out where your resources are at and what you have to do to actually get this done. I think the biggest problem you can have in business is inertia, you know, just doing nothing.
Yeah, and you know, guys, it's just, you know, eat the elephant one bite at a time. So set a plan and just delegate the tasks.
Yeah, that's it. The worst plan you can have is no plan, right? So at least if you set a plan, and even if you do a stock take and you don't get it all done properly, or it didn't go the way you wanted, at least you're going to learn from those mistakes, because you generally learn a lot more from your mistakes than you do from your victories. So, you know, from your mistakes, you'll be able to sit down and work out and then talk to someone like Tiffany and find out what you're doing wrong. The most successful businesses that we deal with are measuring stock or measuring WIP. That's what I see from an independent view as an accountant, because they're all over their numbers, they're all over their figures, and they're just not letting any money out of the door. The businesses that don't do as well just are pretty disorganized and don't know the numbers on the back of these things. So that's the reason Tiffany and I did this webinar, was just to help anyone that wanted to jump on, just to have some quick ideas.
Yeah, there was one just other comment as well around warehouse receipting, and it's a really good point. You know, it certainly doesn't go astray having someone dedicated, you know, having a storeman or storewoman down there actually counting the stock as it comes in and receipting it from the supplier, because that's something that gets underestimated, right? If you're getting things regularly delivered to the warehouse, you need someone accountable to count that in.